This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on today for our program. The Farm Bill, take a look at yourself. The Farm Bill is stalling to the parties involved with the SNAP program, and the CPR program is going through the process of the Agricultural Committee on the Chamber. And then I'm joining with Broderick from USC Commodities in West Des Moines, Iowa. We were talking about the fundamentals with the commodities markets, especially in uncertainty within the grains markets with Brad. Don't forget about the farm progress indicator. And don't forget to visit us at the Farm Progress Show. Meanwhile, we have some coverage of Illinois State Fair in Springfield. You've been listening to Back Roads of Illinois.
That's absolutely right. We're in a situation where when we get down to the end of the market here, things can get kind of highly variable because of, there's this very temporary short-term imbalance between maybe supply and demand in particular locations and at specific moments of time.
The Farm Bill, take a look at yourself. The Farm Bill is stalling to the parties involved with the SNAP program, and the CPR program is going through the process of the Agricultural Committee on the Chamber. Joe Jensen, an agricultural economist from the University of Illinois. He said it is going to be short of the corn harvest. The balance sheet with lower commodities markets with the stocks.
I'm fascinated by, let's call it the strange trade that we're in. The idea is we're continuing to see export pace on old crop look really good. Will that translate for us as we're looking for new crop? Because we're going to need that international boost to work through these larger crops we think we're bringing in this fall.
Joe Jensen said as well, that's right, we were right in this situation in the markets where it is going to be lower for this marketing year. Meaning that the futures markets is getting lower than previously years. Chad Hart, an agricultural economist from Iowa State University. Chad Hart say farmers must watch their local cash bids and how to allocate to grain space for the old crop.
Ending stocks and the stocks-to-use ratio are really just two ways to summarize everything we know about the state of supply and demand in a particular commodity market. For corn, the facts on the ground tell us the supply is tight, very tight by those two numbers. But, says Joe Jensen from the University of Illinois, does the market need higher prices to ration out what's left of last fall's corn harvest? Probably not, for two reasons. The first is that while USDA lowered the size of last fall's corn harvest in January, demand for the crop has continued to grow through the first 6 months of this year. This is both the ending stocks and stocks-to-use ratio indicating higher prices. Still, it comes so late in the season, and this is the second reason, that the safrinha corn crop harvest in Brazil and the eminent United States bumper crop fall corn harvest have the market confident it can make it through to September, says the ag economist.
That's absolutely right. We're in a situation where when we get down to the end of the marketing year, things can get kind of highly variable because of, there's this very like temporary short-term imbalance between maybe supply and demand in particular locations and at specific moments in time.
Meanwhile, the futures markets do not need to move higher to ensure enough is available. This leaves it up to the cash market, where needed, to pull corn from reluctant sellers. Iowa State University ag economist Chad Hart says farmers must watch their local basis and decide how to allocate available storage space, selling some or all of those old crop bushels to the highest priced local market. He's also concerned about new crop corn and wondering if the demand binge will continue.
I'm fascinated by, let's call it the strange trade that we're in. The idea is we're continuing to see export pace on old crop look really good. Will that translate for us as we're looking for new crop? Because we're going to need that international boost to work through these larger crops we think we're bringing in this fall.
USDA will release its first crop production report in August. Its current corn yield is 181 bushels to the acre nationally. The trade has a number as high as 187. For University of Illinois Extension, I'm Todd Gleason.
The world supply and demand from the Department of Agriculture is coming out for this Friday at 11. Thanks to Todd Gleason from the University of Illinois Extension for this audio. I'm joining with Broderick from USC Commodities in West Des Moines, Iowa. Don, how are you? And welcome to join us.
Hey, this is Broderick. Thanks for having me. Good to be on here today.
Let's discuss about the world supply and demand report on next Friday. What is your thoughts about this crop with the yield?
Yeah, Friday's going to be a big one. You look outside, look at the weather. Really, it's been about as good as it possibly can be. USDA has been talking about 181 on national corn yield. That's a big number. We'll see if we get there. But I mean, if we're going to, this is the year. We'll see. Kind of got some more nominal ground being planted to corn this year. But StoneX up their forecast, this morning to 188. So I think they're pricing in a pretty big crop. How long have we been trading that though? I mean, I've been talking to some guys. They've been thinking 187 for the last month or so. Now we're starting to see some of the, forecasters come out with even bigger numbers. It'll be interesting. We haven't had a year like this where everything's just gone smooth, but here we are.
Do you have any concerns about the fundamentals with these reports, Broderick?
Yeah, so quite frankly, the fundamentals on the corn just flat out are bearish right now. Big one we've been watching is the weather. South America's bringing out a big crop as well. Putting pressure on our market. Currently, we are the most competitive in the world, so that's lending some support here. But as far as the charts go, last year we went down to 385. Right now, September closed today 380 and 3/4. Dees is about 21 cents off that, but I imagine that's where we're gonna go. As far as world trade goes, our exports have actually been very, very good this year, across all the grains, really, corn, beans, and wheat. The thing that's starting to kind of concern people, though, is that there really aren't any new crop sales on the books as of right now. China's a big one that people are kind of holding their breath on, but so far that's yet to be seen. So it's the time of the year, seasonality, weather markets, everything's been good. I know there were people talking about an 89-year drought cycle this year. That never came to fruition. We've actually had about as good of weather as we can. Some of the trade stuff going on. I think probably here for the next month, things are, pretty negative seasonally.
Of course, we will see. How is the reflection on the trade barriers on the beans markets?
Yeah, coming into this year, with all the tariff stuff going around, Trump's been working through trade deals with a lot of, smaller countries. China's really yet to come to the table. I guess personally, I'd like to see a little more agriculture in some of these trade deals. He's kind of pushing a lot of energy, which is fine. The U.S. is one of the biggest, if not the biggest, oil producing country in the world, believe it or not. But it would be nice to see, a little more corn, a little more beans in those trade deals. I think a lot of people are holding their breath on China. So far, they haven't yet. They've been buying a lot of beans out of, Argentina, Brazil, things like that. So I think if China did start buying some of our beans, we're probably looking at a different landscape here. So would be a positive for sure.
What is your advice to the cattle markets with these prices to the cattle producer?
Yeah, this is a once in a lifetime or maybe twice in a lifetime kind of market right now. Demand led, cash bull market. We've had a couple scares, as of lately, things looking like they're going to fall apart. We looked at August options expiration here a couple days ago. Market was down like $6 at one point. Actually, we were down limit at one point. Got people a little scared that way. But right now I think a guy's got to be hedged up. Things are great right now. I'm happy. Myself, I'm a cow calf producer, and right now is the time to be alive for the cattle guy. But what goes up comes down eventually. So we're telling our guys, make sure you're hedged up. I know it sounds dumb right now because you're making money hand over fist, but you got to be hedged up because at some point this thing is going to fall apart. Probably better do it in a way that doesn't give you any margin exposure on the board. These when you're back around in cattle, right now you're making money. What happens when these overpriced feeders drop through the floor? Definitely think it makes sense to have some risk management in place, Caesar.
I'm Mm, mm, mm.
I just saw that the cattle in 3, 4, 1 before we start with our conversation. Do you recommend for these volatility for floor plan on the cattle markets?
Yeah, I mean, cattle sure is volatile right now. It's kind of an interesting one. I would play it on the long side of anything, whether it's calls or puts, suit your fancy that way, whether you're bullish or bearish. I'm just awful cautious right now of giving you anything margin exposure wise, because the other day we were down $6, today we were up 3.5. That's kind of what happens when you're at the top here, and it's making national news at this point. It's on the news telling record beef prices. When's the consumer going to stop buying it? I think in such a volatile condition, it is a trader's market, but I think you got to play it safe. This is the kind of market that makes or breaks people right here.
How about the technical buying in the feeder cattle for right now?
Yeah, just the way fats are going, I think it is an interesting one. I was talking to a guy out in Illinois the other day, and he was saying, "Well, why would I feed these things any longer?" He was saying by the time you feed out these feeder calves, make a couple extra $100, but you got to hold them longer. And your risk then is if and when the market turns down. I mean, yeah, just like you're saying, feeders up $5.50, turning the trend long again here. So I think it's an interesting one, that's for darn sure.
Mm.
Sure. What is your final thoughts about the fundamentals with the trade on the grains?
Yeah, so as far as the grains go, now's the time. You're pressed down here in these contract lows on the grains. I mean on corn and wheat especially, beans hovering just above, but we've been telling our guys to you got a 36 cent carry from December to July corn. We're just telling our guys to take advantage of that. You don't want to carry corn another 7 months and sell it for $4. You know what I mean? By the time you're paying storage, or if a guy has storage, we're trying to make a return on that. So on the grains, I would just say look at selling the carry, and on the cattle, make sure you're hedged up. That's kind of what we're telling our guys here.
Where people can find you for your consulting services for their grain marketing and livestock markets.
Yeah. So feel free anytime. Give us a ring, 800-247-4071, or you can email me. My email is Broderick at uscommodities.com. We're at 1226 Grand Ave in West Des Moines, Iowa, if you want to stop by.
Thanks, Broderick.
Thanks, Caesar.
This is Broderick Shaken from USC Commodities on back roads of Illinois. I am Caesar Delgado. You have a good day.